Mr. Mark Selby, how are you, sir?
Mr. Matthew Gordon, doing very, very well.
I'm glad to hear. I missed you in America. You were doing important things in Canada, though. So, did you have a nice time?
Yes. When you're summoned to meetings with senior government ministers, then you go see them. So that's part of the reason I was not in Beaver Creek. Yes, exactly. So there you go.
Fantastic. Well, look, we are going to have a little catch up on the world of nickel, some of the macro, and also some company news today. So, but start off as we always do. What's happening with the nickel price?
Yes, so nickel, since over the 4 months, has stayed in the same range that we've been in since April. So it's basically traded in that lower end of the 15 to 15.8 range. We've tried to hit the midpoint a few times, but the key part here is, and I know I've been talking about it, and people are probably going, "Oh, come on, when is this really going to happen?" But the pressure is really building now. So we saw the ore prices move, through the first half of the year, but that didn't translate into down the chain. But now, again, over that whole 4-week period since we last talked, you've seen nickel pig iron prices and stainless steel prices in Indonesia and China continue to tick higher because nobody was making money or very few companies were making money at those prices. And I've talked about Tsingshan's been using that increase in ore prices to help squeeze out their competitors. So we've now started to see nickel pig iron and stainless steel prices to move. And so, I think you're going to see that shift. And again, the reason I've talked about the late fall as the reason why that timing is going to happen is Philippines has a very cyclical mine output. So literally the third quarter, they produce almost half of the nickel that they're going to mine for the whole year comes out in that third quarter. And so we're now at September 24th at the end of that third quarter. And when you go into the fourth quarter, production levels drop by half. And so, ore prices have come off a few percent from the big run up that they had, but they've held up despite the Chinese trying to talk the market down for the last 2 months. And now you're heading into a period where ore supply should get tighter. The other thing the Indonesians are doing, they've used their classic forestry review. The forestry industry has always been a way that Indonesia uses. In the olden days, they used to use it to extort bribes. They basically held up a couple $100 million dam project that Inco was building to produce a lot more nickel in Indonesia. And they held it up for 3 years because Inco would not pay anybody a bribe to get the permits that they needed. And one little square of land that we needed fell out of our contract of work, and that's it. But because very few companies are complying with anything, again, all the videos we've seen of all of that environmental devastation, that starts with not properly managing the way you take material off the land. And so not surprisingly, they conducted the first phase of the review, and 190 companies got their license taken away, including, let me get the number right here, 36 nickel producers. Now, none of these are particularly big, but again, it's that, prices are set not by the average, but by the incremental amount. So you've got Philippine ore supply coming off, you've got incremental, supply from these smaller producers now coming off. And again, I think you'll continue to see those kinds of clampdowns, pressures, crackdowns on various producers as Indonesia tries to squeeze the market. And again, we've talked about before, they've already changed the licensing from 3 years to 1 year, and that did get through all the approvals that it needed. So again, I think we're shaping up for a very, very, very interesting fourth quarter.
We got. I remember getting caught out about 10 years ago on a deal in Indonesia. The old forestry license came out, nothing we could do. I've always said pay bribes. I've always said that. So that's for the American audience. That was called English sarcasm. It's tough out there, right? Okay. So your view is that we're kind of moving into this fourth quarter where we'll kind of see this sort of drop off in production due to lots of factors we always talk about. Knock-on effect for capital markets, knock-on effect for public markets will be what? Don't we need to see some sort of sustained inventory drop-off?
Right. So the key piece here is you're going to see, Indonesia has been a net negative for the market for 10 years, right? Investors have just said, look, why do I want to invest in nickel? Every year, Indonesia just pumps out more nickel. It just seems like this never ending, river of nickel that comes out of this place. But, again, they're at the point where they control more of the market than OPEC. 4,000, if they realize, nickel prices go back up to where they were a year ago, and nickel prices just, between 18 and 20,000, if they make $4,000 a ton more on the nickel that they sell, they will wipe out their current account deficit, right? It's that meaningful to the Indonesian economy. So we are now going to enter a period where Indonesia is going to be, supportive of nickel prices going forward. And so for those projects that can make money like ours in that, in that $20,000 ton range, not north of 22, you should really start to see things re-rate and people get interested in nickel meaningfully again. So that's the real market impact of what's going to start this quarter.
Okay. So, let's see how that kind of plays out. Obviously, say end of September, we're moving into that phase now. We'll talk about it anon for sure. Latest INSG numbers are out. What can you tell us?
Yeah, so unfortunately, again, reading the headlines and not helping investor sentiment, the Nickel Study Group, and I've actually formally sent a note to the chair of the group and the industry advisory panel. They continue to report surpluses that are way out of line relative to the actual change in inventories, right? At the end of the day, the LME, the Shanghai Futures Exchange, these are markets of last resort, and you can deliver metal to those things if you can't sell it in the marketplace. And so, at the end of the day, whatever market balance surplus deficit you have should track, with over the long run with those changes in inventory. And if you look at the INSG numbers from 2015 through 2021, we were kind of on either side of the change, which is what you'd expect. There's a margin of error in the calculations are there, but then there's this hockey stick since the end of 2021 where, the reported surpluses have been far in excess. And again, in 2025, the reported surplus is more than triple what the change in inventories has actually been. And so, people just see that there's these large reports, big surpluses, that's it. There's not. There's now the people were using excuses 3 or 4 years ago that it was class 2 production that the surplus it couldn't be delivered to the LME, even though again, 90% of the production costs of those things are variable, so it makes no sense to incur a bunch of costs to make a product that you can't sell. None, zero. In the olden days when Inco operated and 2/3 of your costs were fixed between union labor contracts and, you needed to operate at full capacity all the time. That's not the case with all of this nickel pig iron and ferronickel production. And today the Chinese have built, hundreds of thousands of tons of refinery capacity to take any of those intermediates and convert them into a class 1 product to deliver. And so that excuse is gone. There's no, those numbers are wrong. And again, I think they're missing the buildup and in process in terms of the EV build out. That's the same thing 20 years ago with the Chinese stainless industry. And I think, the Indonesian Chinese supply numbers are a little bit fudged. And again, Chinese have lied about, statistics before. That, quote, that never happens. So I'm going to be pushing quite hard to make this because it's again, the purpose of these study groups, there's copper, lead, zinc, and nickel, is to try and provide, sort of a independent sort of clarity in terms of where the markets are going. And this is just misleading. And again, it's going to result in the misallocation of capital because of it. So
right, okay. Well, keep us up to date with how the conversation manifests itself in the end. Because it'd be interesting to sort of see their rationale, or at least understand their rationale as to why they've been putting out the numbers as they have, for sure. But there may be some more visible numbers that we can look at. Car sales, electric car sales specifically. How's that looking?
Booming. So the latest numbers from August up globally like 15% versus 2024, which was great news. Europe, again, which was supposed to be dead, up over 30% year over year. Now, again, I talked about last year how there was a bunch of sales pulled forward, and that was distorting the numbers. We're now on the other side of that, where sales are, because we're off a low base. The sales growth numbers look excessive. underlying trends 15 to 20%. That's great. And then, and again, what we need to see is that flowing through into nickel, going into batteries. Again, LFPs everywhere, going to be used for lots and lots of cars, but there's still a bunch of cars where you need nickel batteries. And again, nickel deployed trails about a month, but the amount of nickel that went into batteries, if cars that were made that year, that month have gone up 13% year over year. So, as long as we're high single digit, double digit growth in nickel from EVs, the longer term demand story is going to be quite good. So
right, and then we getting a sense of the type of car profile, because I think obviously hybrid is I'm looking at some of the profiles some of the manufacturers are saying actually hybrid is going to go from sort of 20% of what we do to maybe 50% of what we do, and pure play electric is going to go down. So it's good for all critical minerals in the end, isn't it?
Oh, 100%. And with a hybrid battery, right, you've got you still have a full internal combustion engine and then a smaller battery. And so again, you're not going to use a big bulky battery chemistry to be able to have that battery in place. So what they've actually been using is a 60% nickel battery rather than a 90% battery. And they've now figured out how to make that battery chemistry safely enough, then they can run it at a higher voltage than they can the other batteries, which gives them the same amount of energy. So we've been told these 60% nickel batteries, are one of the cathode materials of choice, for those hybrid batteries. So again, they're much smaller than a big EV battery, but again, in terms of nickel units going into the sector, it's good news for nickel.
Oh, fantastic! Now, again, another sort of we can sort of pick up on later. Maybe can even look back and sort of see how that has all evolved. The other thing was, I think, we talked about it a little bit last time out, which was, the Canadian government and some provincial governments at that are starting to, I guess, adapt and change their plans. Some of them moving forward faster than others. You've obviously been in Canada instead of down in the US. Talking to some of the investors down there. You're talking to governments, provincial governments. What about?
Yeah, so the key piece here is, with the U.S. trade threat, and that sort of as the Prime Minister said, the rupture in our relationship, they're really using this current time frame, and you're seeing more collaboration between the provincial, the premiers of the provinces and the federal government than we've seen in literally decades. And so there's a real national consensus emerging around, what we need to transform our economy. We need to play to our strengths, and we need to be less dependent on the United States. And, as a country, we used to be able to do lots of big projects quickly, and we need to regain that capability. So we had announced earlier in the summer that we were on a list that the province put forward to the federal government to have us considered to be a national priority project. In the first week of September, the Canadian government leaked the slimmed down list of projects that they're considering to put forward on that list. The reason they're doing it is a couple of the provinces did not do a good job communicating how they're going to accelerate projects while still respecting free informed consent from First Nations to make these happen. And so I think the government leaked these just to sort of test which projects have more pushback than others. We're in great shape. We have a First Nations community as a shareholder. So that's not an issue for us. So they leaked the list in the first week of September. We were on 32. There's only one other nickel project, smaller one in Manitoba. Manitoba did not have that many projects to put forward in the mining space. So this was one of them. But the key piece here now is to see the official lists that come out. So the first official list came out was a bit of a disappointment. It was only half a dozen projects. And they were actually, most of them were either half built or fully approved. I think they wanted to give themselves some quick wins. And we may have got some phone calls from senior government officials just reassuring us that no, there's more projects to come. And in terms of, what they're looking for is scale. Is it something that can get built relatively quickly? And then in terms of, First Nation support, right? And so we tick all the boxes in terms of, what's going on. And then critical minerals obviously is a bucket there. So, we still have to wait and see. The next list is supposed to come out before early November, but, barring some sort of, thing, we should be on that next list, which again will allow us to go to the fast track door at every one of the different government windows there are for funding and approvals and so forth. So,
and there's still money for all of this. Is that what you're saying?
oh yeah, they're going to be
it's still part of the agenda.
Yeah, this is about, they really, again, Carney got an old Goldman Sachs buddy of his to come out of retirement to run for political office, to become the Minister of Natural Resources. He pulled a guy named Michael Sabia out to run the bureaucracy. Again, these are guys with lots of money, and it's about, we have a window here where we can transform the Canadian economy by getting these big projects going, and we need to do that. Again, as a national priority, which is, what they're talking about. So, it's approvals and funding. So, it should help on both fronts. So, again, government takes a while to get going, but I think once they get going, it'll be, it's going to be very constructive for those projects that are, of the scale and have the teams in place to be able to deliver it. So
that's fantastic. Approvals and funding. That's what we all want. Right, bit of company news. So who do we start with? Next Metals. You start there.
Sure. So Next Metals. They were one of the, we'll talk about the companies that used to have nickel in their name, but no longer do. They had a couple projects down in Botswana. There was a high grade deposit that they've been talking about for a while, but there's their Celebi project, and they're now drilling the Selkirk, which is a lower grade disseminated open pit type deposit. And again, they're reporting copper equivalent 1%, but it's really, 0.3 nickel, 0.3 copper, and half to 1 grams PGMs. So again, decent intervals of that thing. The challenge with this deposit has always been concentrate grade. So during the last 4 weeks they've also released new network, which again showed they could make a nickel concentrate that got over 10%, which is great because the other ones used to be in the 6% range. We'll see what Selkirk can deliver. I'm not sure. The disseminated one will be a challenge. But again, to get that con grade, they're only recovering 56% of the nickel from a 0.64%, nickel grade. So again, there's a pile of people who get all fired up about grade, but nickel is all about, it's not the mining, it's about the processing and the downstream from there, that really's a challenge. The other company news from people who used to have nickel in their name was Power Metallic. And that, they had that crazy good high grade copper PGE set of discoveries. We put out a bunch of drilling results from a recent program. Again, not as good. There was a negative market reaction to it. Emphasized many times, it's great to get a good high grade interval. We need more of them. But the bigger challenge is then taking that higher grade interval and then building a resource, around it. So we'll see. Some of these results, not so great in terms of continuing to expand that and delivering, similar targets along the same structure. We'll see how that goes going forward. So that's one to keep an eye on if you're a shareholder today. Other big news, FPX, our big ultramafic partner focused on the aurorite nickel iron mineralization. They signed a deal a while back with the Japanese Geological Survey to look at other aurorite deposits globally. And they announced the first target from that generative alliance in Newfoundland. Newfoundland's on the east coast of Canada. That's also where First Atlantic Nickel has some aurorite. Again, they announced a couple of other First Atlantic Nickel announced a couple of other drill results where they continue to step out on that project. FPX also announced some more pilot plant results. Again, great to see. These deposits are low grade, but they make a very high grade concentrate, which again, I'll emphasize in nickel, the downstream is a big part of the cost structure. So they make a nickel iron concentrate. It's great for use in stainless steel, and they produce a 64% nickel concentrate from 23 tons of material, which was great to see. So that's the rocks in Newfoundland continue up through Scotland and then all the way up into Scandinavia. So, there's a whole, that's one of the places in the world where you see nickel deposits. So not surprised to see a couple more show up in Newfoundland.
Well, that obviously that's kind of helpful to understand. Electra Battery Metals, I spoke to him recently. They've had a bit of news, long time in the making.
Yeah, so they've done it. I mean, Trent's been going hard at getting the cobalt refinery restarted and rebuilt, and some big steps in the last couple months in terms of getting the funding together in place there. And they got a $17.5 million term sheet from Invest Ontario. Again, I've talked about our project. The province is very focused on processing, so there's big buckets of money available at the provincial and federal money to get that processing going, which is great to see. At the other end of the spectrum, mining only, no processing is Magna Mining. Put out some pretty splashy drill results from some of their higher grade targets in Sudbury. The key piece there is, off the back of those, they're able to raise $50 million. So kudos to them to get, again, they're targeting mostly copper these days, and copper is in vogue. Tough thing with the thing to watch if you're a Magna shareholder is, can they get to free cash flow, right? Mining, if you recycle dollars, that's not particularly going to generate value long term. And the challenge with these high grade deposits is it takes a lot of dollars to explore for them, takes a lot of dollars to develop them. And then, you hope when you mine them that there's enough left over to then explore and develop the next region. And so that's the piece that you're going to have to wait and see in terms of how that plays out. And the last bit of news is Western Mines Group, who've got a new big ultramafic in Western Australia. Again, 4 more holes, sit at the upper end of the 0.2 to 0.3% nickel grades that we see for these types of deposits. And the thing that's interesting, there's one section of the ore body, where they do get some higher grade. And again, this happens where you get some upgrading and a piece of it. And one of the holes had 15 meters at 0.75% nickel. So good to see that again, because that's one of the few discoveries of the last 15 years. So good to see that one continue to advance.
Well, it's kind of nice to sort of see companies moving forward and making things happen. Because I think that my big takeaway from my time at the WNA, which is the World Nuclear Symposium, and then at Beaver Creek, and then at Colorado Springs, is there's money back in the space for the first time in a long time. Alternative money, new money. And I think companies who've had to spend the last 3 or 4 years, making their own way through this by trying to, find capital, and it's been expensive capital. It feels like it might be time where there's money around to allow good companies to do what they want to do. I mean, I don't know what you've heard or what you're seeing elsewhere. I know you've been focused very much on the provincial and federal government stuff at the moment, but what are your thoughts on that?
Oh no, from the investor base, as I said, through the year, we've sort of had one or two big, whether it's generalists who are coming back into mining for the first time, whether it's private equity guys who are saying, what, we're ready to look at other metals because we think, we're seeing a cycle turning here at this point in time, and then specifically for nickel in terms of the tide turning around thoughts around Indonesia. And so, I think it was said, I think nickel particularly is going to be an interesting fourth quarter. And I think, again, broadly across the commodity complex, once people have made some money on some gold names, they can start to recycle that into some other commodities and earlier stage companies. So, fingers crossed that, we'll have a good 2026.